Good afternoon, traders. How we doing out there in this market? It is a tough market today indeed. We got the comments that everybody was waiting for during the week, and it only took 8 minutes to get through the speech. This really rocking the market today. We have a lot of stocks coming down right now. We'll talk all about it right here on Stock Market Movers. We have a great guest today. We'll be asking a lot on questions to see what happened in Jackson Hole. And of course, we'll take a look at what maybe potential stocks Stephanie Link sees here, as we'll have the chief investment strategist and portfolio manager at Hightower Advisors joining us at 1:45 p.m. Eastern. Let's go ahead. Let's dive into today's topics. We'll talk about, of course, Fed Chair Jerome Powell at Jackson Hole Symposium. We'll talk about the PCE deflator and what did we get in core PCE. We'll take a look at the University of Michigan Consumer Sentiment Index, concerns for natural gas going into fall and winter. Ford Motors, a little bit of a price hike on the Mustang Mach-E. We'll take a look at Merck, and then we'll get into our earnings stocks of the day. We got Marvell, Ulta, Affirm, Workday, Gap, and then we'll talk a little bit on Elon Musk, SpaceX, collaborating with T-Mobile. Maybe a best of breed name there. We'll take a look at those, and of course, we'll get into our interview later today. Do me the favor, get us started with a good thumbs on up as we go ahead and get the show started. Welcome to Stock Market Movers, where we cover all the headlines and get to the expert opinions that you guys want to hear from. There are 3 ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, traders, let's go ahead. Let's dive in today's show. Let's take a look at the overall market, and looks like we're starting to finally get a little bit of a bounce back. It was a really hard washout, so let's first take a look at the overall market. Then we'll get into a little bit more particular here. Let's take a look at the 15-minute because the 1 minute is just a really ugly sight. Let's take a look here. Overall market really getting hit. We'll talk about the comments that came out of Jackson Hole, but definitely taking it down here. The SPY finding a little bit of a bounce here, closer to the 410 level, 409 level. Now we're getting back into the ranges that I thought we would probably get into. So it was this kind of sideways consolidation here between, of course, you had July 29th all the way until August 9th. There's some consolidation there, support around the 406. 406.77. So that's definitely where I could see us finding some support. And we're coming up towards this trend line. This is where I thought we would head to this week. Now, the real question is, will we crack from here and get down towards the 400? That's definitely still in play for next week. I don't think that's going to happen anytime soon today, but something to keep on watch, right? And so let's talk about what happened in today's. Let's go ahead. Let's talk about markets dropping on Fed Chair Powell's speech at Jackson Hole Symposium. And it only took, like I said, it was an 8-minute speech there and then right back off. And the market's just really getting hit hard on here. Let's take a look at these comments. All right, so Fed Chair stating here, the Fed will use tools forcefully to attack inflation that's still running near its highest level in more than 40 years. It came a little bit harder than expected. Powell said this is no place to stop or pause. Even the benchmark rates are probably around an area considered neither stimulative or restrictive towards growth. While higher interest rates and slower growth, softened labor market conditions will bring inflation down. They will bring some pain to households and businesses. He said in prepared remarks, these are unfortunate costs of reducing inflation, but a failure to do so and restore price stability would mean a far greater pain. At the same time, other areas of the economy are slowing. Housing in particular is falling off rapidly, and economists expect that the huge surge in hiring over the past year and a half is likely to cool. We're moving our policy stance purposely to a level that will be sufficiently restrictive to return to inflation to 2%. Looking into the future, the central bank leader added that restoring price stability would likely require maintaining a restrictive policy stance for some time. Now markets are really starting to weigh in here. If you look at the CME tool, a lot of people are thinking that we could potentially get a third consecutive 75 percentage point interest rate to the hike there. And now the question really comes, will we get that interest rate hike rate? Of course, this is coming in September's meeting that will be coming on up. We will get another CPI data also before this meeting. So I think that's important to definitely note, something that we'll keep watch. Will inflation keep showing signs of peaking? But again, pulling back to the statements, like they stated, they need to go ahead and see it completely down, falling off rapidly, and they want to go ahead and keep it sustained just in case. The real key here is getting inflation down. They stated that right now they're neither restrictive towards growth or stimulative towards the growth. And so we need to get more into that restrictive to really have that effect on inflation. Something to keep on watch. I think nobody was expecting to hear comments like they will bring some pain to households and businesses. They're kind of the next kind of steps that they need to take. This was something that I think definitely threw us off, and we went moving pretty fast. I mean, at first we had a strong dip down, and then it came back with a rip back on up, followed by another takedown. So it was really hard to trade. I don't know if you guys were there on our live trading stream, but we did trade this live, and I was able to knock it down and really kick it out the waters. But it was one of the hardest trades I probably have ever had to take. I took success while this was going on, and you could see it's still going on up, but I took it for this first push on up, and then eventually buying it back on the pullback, going down there towards the 3620s, then riding it up there towards the wave. I didn't even get past 39 there. It was really a really good trade there for me on success, but something that I'm going to keep watching is how these semiconductors keep coming down. These were the stocks that really led the rally back yesterday. So that's why I was trading these to the downside as we got those numbers. Of course, let's get out of the Jackson Hole Symposium talk. We can get into some other conversation. We did get PCE to come on in, and PCE, Personal Consumption Expenditure Price Index, showed a year-over-year rise of 6.3 in July, down from 6.8 in June. So what is this showing us? Yes, inflation is starting to peak, but is it in a fast enough motion here to really cause the Fed to turn kind of more in a dovish stance? Not what we're seeing. This is still kind of more in hawk territory. The core PCE index rose 4.6 year over year, a gain of 0.1 month over month, coming in softer than the forecast. We also, just to kind of give a little bit of support for the upside coming back, we did get better than expected University of Michigan Consumer Sentiment Index. So the final reading in August came in at 58.2. That was up, of course, from 51.5 in July and above the 55.3 expected. So remember, at 50, they're thinking more of a contraction. Anything above 50, and it starts looking better. And you can see we're starting to trend in the right area, going from in July 51.5 now up to 58.2. Is at least in the consumer sentiment starting to turn around. I don't know how you guys are feeling out there, so please, let's go ahead. Let's take a little bit of a poll here. If you guys put a 1 in the chat, if you guys are feeling like inflation is truly turning around, put a 2 if you just don't know if we've peaked enough, and put a 3 if you feel like inflation will roar its ugly head and come back on up. And whoever they're taking in this survey, maybe they're wrong. Love to hear what you guys have to chime on in. All right, catching up with the chat. I see Jeff out there. Thomas, what's going on out there? Definitely hit the like. Sabrina, Kalu, Carol, it's good to have you guys. And yes, I'm excited to have Stephanie Link on later today. So we'll see what happens. It looks like there's some threes are starting to roll in there. Interesting to hear that. And some people think the twos. I think that's really interesting there. So it just goes to show you that it's not going to be as simple and clear cut as a consumer sentiment. All right, let's get out of the better than expected University of Michigan consumer numbers. Let's talk about the concerns for natural gas going into fall and winter, something that's really on my radar. And you can see today, UNG tried to pop up with that market. Of course, the market pulling back a little bit here, definitely pulled it right back down. But one of the things that I wanted to talk about is recently I've been hearing more and more talks of the British government announcing that it would pay £400 grant to all households over the 6 months of October to help the bills, with an additional 650 one-off payments to 8 million vulnerable households. What does this show me more and more? That there's concern really out there. I saw a note by Johnny Marshall, senior economist at the Resolution Foundation, stating that we are on course for thousands to see their energy cut off entirely, while millions will be unable to pay bills and build up unmanageable arrays. So I think this is something to definitely keep on watch to see what happens in the natural gas situation. Will we get another complete rip through? One of the ones that I've been watching also is Boyle. Boyle hasn't made it back to those highs, so I'm looking to see, will we come back and get through these highs above there, about the 135s and the 140s? Something to keep an eye as we go into fall and, of course, winter. All right, getting out of the natural gas talk, let's keep it going here. Do me the favor, guys. Give us a thumbs on up. Trying to get some more viewers here, of course, to keep on growing right here on Stock Market Movers. Let's go towards it. Next conversation is about Ford. Ford hiking the Mustang Mach-E due to battery costs. And, of course, we've been hearing more and more mentions, right? Supply chain conditions out there. Are they improving or are they not? This shows me more and more that they still haven't improved enough, at least for the auto manufacturers, as what we've been seeing. Well, Ford joining the major automakers, including General Motors, Rivian, Lucid, and Tesla, that have raised price on their latest electric vehicles, and Ford now hiking its starting price of its electric Mach-E crossover by more than $8,000 for certain models. Of course, this is because of those battery cost increases, but it just shows me that the supply chains haven't really fixed on. And let's take a look at how Ford is trading today. It is pulling on back. It's not a massive pullback, but something definitely to keep on watch. Will it cut back down through the 14? It's made a big run in July going into August, and it was about a 1 month run, about 43%. Will it pull on back here? I had the 50% drawn there towards 14. That's the level that I think you could probably find some buy the dippers. We'll see what happens. 200-day right above it at 1653 is definitely also something to keep in mind. All right, let's keep going here. Out of Ford, I don't know if you guys have seen the Mach-E. It's not my favorite EV. There's still some other ones that I'd probably get in front of it. But you see those prices going on up. That's why the EV credits and what has come out in the Inflation Reduction Act probably is definitely going to help to try to keep pushing the EVs rolling on out. Let's go to Merck now. Merck buyout of the Seagen hits a speed breaker over price agreement. You guys are probably seeing Seagen down on this news, and it was down in the pre-market. Let's see if it's bounced back, at least in the intraday. You can see it's starting to bounce back a little bit here. I'll show you guys the tape. It is starting to get back up there towards the 156 and 158. Of course, this is a deal that was expected to be sealed within a few weeks, worth roughly up to $40 billion or more. But now they're really starting to think that between Merck and Seagen that a price might not get agreed upon and the deal could fall through. So Merck is kind of going sideways here. We'll see if it can continue. This has actually been a really strong stock. I mean, if you take a look at the dailies, this has been holding towards the high end here. An important level to watch, the 50-day moving average, or I have an EMA 65 here, but definitely watch for it to kind of keep below it to keep that moving average up here. and looking for a move up towards 95. Of course, probably the deal needs to come through here, but Seagen could also kind of get out of this deal and maybe look for another suitor. We'll see what happens there in Seagen. All right, getting out of the Seagen talk. This is really not where I have the biggest edge in biotech. So I just try to cover those news and won't give too much opinion on that. We'll see what's going on out there. How we doing out there, guys? Eric in the chat. Bryce, what's going on out there? Sounds like Biden is advising the Brits. Hey, we'll see what happens out there. Earn my like. I appreciate you, Eric. Let's keep going here. All right, let's go towards the next conversation. We're going to get out of Seagen. We're going to go into our earnings talk. Let's go ahead. Let's start diving on in. Like always, earnings is so important because, I mean, that's what we're going to go ahead and find out a lot on guidance. This week, it was the story of guidance with earning stocks, whether it be from NVIDIA, different stocks that we got. It was a lot of movement, not based on the beat or missing of the EPS and sales, but a lot of the focus on the forward outlook, as that's what we're all looking at the markets, right? Are we going to be bouncing back? Are the earnings going to get better down the line or worse down the line? Because if they're going to get worse, then of course we can expect to see some downside action in the future. And so this is what I also would state, keep on watch next week as we keep moving forward. Now you're going to get some kind of stocks that you need to keep on watching. Does the guidance keep driving these stocks, and when does that change over? Marvel, let's go to Marvel. I know that it was down on the day. Let's see where it's looking like now. It's actually had a nice kind of daily outlook if it was able to hold here around the 51. So that's where it's kind of holding at right now. So I'm not saying that it's completely just flushing on through here, but it's an interesting level here, this 51.11. Will it hold on to 51 today, or will it come down there towards the 50? Marvel Technology coming in here at an EPS of 57 cents, beating the 56-cent estimate. Sales at 1.52 billion, missing the 1.52 billion estimate. It was just off a little bit there on the millions. Marvel Technology Group seeing Q3 EPS at 56 cents on the low end, 62 cents on the high end versus the estimate at 60 cents, and sales at 1.56 billion plus or minus 3%. So not the worst guidance there, kind of more in line, but it came down here, and a lot of this coming down with the technology stocks. We'll get into it a little bit in what was hot and what was not. All right, let's keep going with some of these earnings stocks. Going to try to really quickly roll through it. Then we're going to take an overlook at the sectors and industry. I'm seeing a little bit of a bounce back, so I want to give it a couple seconds before we go ahead and get into what was hot and what was not. And don't forget, guys, like I mentioned earlier today, at 1:45, we'll be having a great guest joining us, Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower Advisors. I'm excited to get into that. I know that you guys are probably excited in the chat to hear from Stephanie. So feel free to throw up a question in the chat. If you guys have a question for Stephanie and you want her to answer it, this is your chance. There's not many times that you'll be able to go ahead and have a question be given to Stephanie from you guys in the chat, the retail traders out there. I'm here for you guys, so throw it on up. I'll make sure I try to catch one while the interview is going on. All right, let's keep going. Let's get into the next stock here. Let's go to Ulta Beauty. Ulta's been a monster, and I mean, really, I really feel like this is one of those stocks that I should have invested coming out of the pandemic because, of course, it was going to get some lift as people went from being stuck at home to going back into the office. You would think that, Ulta Beauty would get the lift, and you can see it here. Since the pandemic, you know how far this is up? It's up 200%, 222%. But what I like about Ulta more even is look at the overall trend. This is a weekly chart. This goes all the way back to 2008. What does this show me? That whoever is running Ulta is really doing well. Whoever is running it. I mean, take a look at that. That's a really good trend. And not many times are you seeing it really leak back down. Overall trend in a nice vertical, linear mode. And so for me, Ulta is definitely one that you want to be having in your portfolio. But let's take a look here. Ulta is pulling on back here after trying to get back up there to the 440s. Now it's going to try to find some support. I'd be watching for it to try to find some support around 410s. But let's get into the 15 minutes so you guys can see that. Around the 411s, 410. Let's see if we find the bounce there. Of course, this is going to be dragged down by the market. Let's take a look at the EPS here. EPS at $5.70, beating the $5 estimate. Sales at $2.3 billion, beating the $2.2 billion estimate. Now, where it really started to look a lot better is when you look at the guidance here. Ulta raising their full year 2022 EPS guidance from $19.20 on the high end, $20.10 to now $20.70 on the low end, and the high end at $21.20. They also raised sales guidance from $9.35 billion and $9.55 billion on the high end. They raised it up to a low end of $9.65 billion on the low end and $9.75 billion on the high end. So a raise on guidance, that's going to give you a little bit of a pop. Now we did see this pop coming back. Is this an opportunity for a buy the dip? Yeah. At least in my eyes, I think I like this. But like always, make your own investment decision, guys. I'm not here to kind of give you financial advice, but I do like this pullback here, especially now you're starting to pull back towards the trend after a good earnings report, some good guidance. Would look for it to catch around maybe 410s, 409s, and make its way back up. We'll see what happens here. Ulta Beauty. All right, now one stock that did get hit that I was taking a look at, and you guys know that I've been a little bit of a bear in this one, is Affirm. Let's go ahead. Let's dive into Affirm Holdings here and see how it traded today with the action. This is one stock that, man, sometimes you get stopped out a little bit early, and then you see it going in your direction. Clearly one right here, and I'll tell you guys exactly where I got stopped out. I got stopped out in the 39s on this day after the red day. I started getting excited here on Monday, August 15th. And then the next day it went up there through the 40s. That's where I got stopped out. Eventually it's been pretty much downhill since that day. It's been about 36% down. And this was definitely one of the stocks that I was trying to get swing short. There's not many that I was willing to do, but this one was one of them. And it's continued down here. Let's take a look at their earnings. Affirm Holding coming in here at a loss of 65 cents, missing the loss of 59-cent estimate. Sales at $364.13 million, beating the $354.8 million estimate. Affirm sees Q1 revenue at a low end of $345 million to a high end of $365 million versus the $386.02 million estimate. So lowering the guidance there on Q1 23 revenue, and then also lowering here the full 23 revenue. Well, actually it's a raise here on the full 23 revenue. It's a raise here on the revenue from 1.62 billion on the low end, 1.725 billion on the high end versus the 1.34 billion estimate. So full year 23, a higher outlook. But for right now, Q1 and 23, they're pointing towards the downside. So a little bit of a mix there on the guidance, but we'll see what happens if Affirm can keep coming down here. You can see in the open, this one didn't even try to really get back there. It did give a little bit of a wick here at 9:15. Right at the open, went up to around 28.80s, but then just failed right back down here. We'll see if Affirm continues on the downside. All right, catching up without you guys. What's up? Mitch, you can stand up. I'm sure you're not wearing pants. Of course I'm wearing pants. Come on, man. What do you think I am? Let's go ahead. Let's get into it. Money Mitch out ADP stock. Hey, not a bad one, Kareem. I'll take a look at it a little bit later down there. Let's get into it, guys. If you guys have a ticker that caught your attention today, definitely throw it on up, and I'll make sure that we dive on in it. All right, let's go ahead. Let's get to the next one up. Let's do Workday. That was an interesting earnings report here. It did spike up about 15% on their earnings. Let's get into their earnings right here. EPS at 83 cents, beating the 81-cent estimate. Sales at 1.54 billion, beating the 1.52 billion estimate. Workday maintains full year 23 subscription guidance there at 5.53 billion to 5.5 billion and sees Q3 subscription revenue at 1.41 billion to 1.42 billion. Now, one thing to note, there was an analyst that kind of maintained their buy. That was Needham and raised its price target to 220. It's something to keep on watch. It's not a bad one. I mean, it's hung around, right? I mean, it has pulled back. It didn't pull back all the pandemic, and now it's starting to come back. Is this an opportunity? Something that I'll keep on watch. It's one of those stocks that, I'm not the biggest bull on software application names, but in this one, it doesn't look like they're hitting bad numbers here. The guidance not looking bad, but it's kind of more in line and something that I need to keep watch when the favor will get back into workday. It had a good day. Now let's see what happens. When will it catch a bounce? Will it retrace all this and get back there towards 162? We'll see what happens here. All right, one last earnings stock, and then I can do what was hot and what was not, and we'll be getting into our interview with Stephanie Link at 1:45, so stick around for that. All right, next one up is GAP, GPS. Check that out, guys. Today was getting on up there, now pulling on back here towards the 981s. Let's talk about their numbers. EPS at 8 cents, down from 70 cents year over year. Sales at 3.86, beating the 3.82 billion estimate. GAP executives saying that we will begin implementing later in Q3 a cut in overhead investments, including a pause on planned hiring and open positions. So right there, trying to focus on the margins, trying to cut some of that job and planned hiring so that they can go ahead and meet their numbers. We'll see what happens there in GPS. Can it get back up to 11? The daily outlook doesn't look the best, and it's just been on a really long downturn. If you take a look here on the weekly, take a look at this. It's just been pulling on down. And so in my eyes, it really needs to kind of start holding above here towards 11, 12 if we're going to see a reversal in GAP. All right, what's going on in the chat? How we doing out there? Snow is hot. Let's take a look there. Snow has continued on up today. It was one of those that I was calling out. Relatively, this one was holding up pretty well, and it held even on the downturn. Interesting to see snow still right off the VWAP there. Snowflake. All right, let's go into what was hot and what was not. A lot of what you guys see out there. Let's go into it. Now, of course, what I usually do is I look at the change percentage from the open. That's what I like to pay attention to. So let's get into that. Energy down about 0.69. We're going to look to see if energy comes back roaring. XOM, if it can get back through 99, I would be looking for a push towards 100. We'll see what happens on these names. I think they did get dragged down with the market. You could see it in a stock like a leverage trade to the downside, like Drip, when they got this spike around 11 or 10 towards 11:30. Now it's starting to pull back. You could see Gush take off. We'll see what happens on these names. Will Oxy get the lift too? I'm looking for a move up there towards 77. And I will be mentioning Oxy probably a little bit later today, but keep this one on your radar. We'll see if it gets to 77. All right, let's keep going. What other stocks were doing well and the worst here? Let's talk about the ones that got beaten down, right, which were tech names. Look at this leak. Look on the sector as you were coming up yesterday, and it was looking good. Nice rip on up, but today you really got hit hard. A lot of stocks down big. Affirm's down 20% on the day. Domino down about 29%. And let's take a look at some of the high cap names, right? Some of the leadership today. Leadership straight down on Apple. Doesn't look good there. 165. Really hard turnaround after a really long bullish trend, but it's okay to see that pullback, but definitely weak there. Microsoft down today. TSM down about 2.36%. Google down about 4%, showing us a real pull there of the overall market with some of this leadership. Meta down 3%. NVIDIA's down 7%, team. Yesterday, I'm sure you guys were here when I was talking about NVIDIA and what were some of my questions. Well, of course, I was a little bit concerned. I was like a little bit scratching my head, like, what's going on with these plays? Because if we took a look and deeper dive that we did here on Stock Market Movers about NVIDIA, we could see it. The earnings weren't great. That didn't point to the upside, but it did get bought up yesterday, and it did get the push, and it pushed all semiconductors. It just wasn't Nvidia. A lot of them started buying the dip on plenty of names, and today you're seeing them really get hit. Micron right back down. You can see it here, the lift and then the drop. These are the stocks that can definitely catch you on a bull trap, especially when it just didn't make logical sense for me yesterday why Nvidia was coming on up. And today, it gets more into that logical sense. One thing that I will say is that if you ever feel like the market is making a move where you just feel like the logics just don't add up, it doesn't add up, the move doesn't add up. Well, a lot of times what I do now is I leave those stocks alone for that day. And I tell myself, come back tomorrow, see what happens tomorrow. Every day doesn't need to be the opportunity. And just like if you're seeing something and you expect something and it doesn't happen, don't just try to get that confirmation bias to swing at that and make revenge trades. Wait and see the following day to see if it comes back more in line with market logic. All right, let's keep going. What else are you guys mentioning in the chat? Yeti getting cold. Take a look. CRM being brought up. Nerve happening right now. Well, Jeff, I'm going to stay off of Nerve right now because it's not kind of really a stock that we talk about too much on a show like this. But it's not a bad one there. I got out of Jay-Z at 148.50. Wow. You guys are definitely brave on some of the trades that you guys have been taking. All right, let's go ahead. Let's take a look at some of the other stocks that really got hit hard. Of course, technology names getting hit hard. Semiconductors were definitely those that got hit the hardest. I mean, you guys can just keep watch. AMD leaking 4%. So many of these. Intel back down 3%. Marvel down 7.8%. It's just really getting dragged now. A lot of these names just really just getting hurt here. Skyworks straight down on these. And so you got to be careful. Another thing to note, right, is what's going on with growth. ARKK is a major way that we keep up with these names. You can see here what happened to ARKK today, really getting hit hard. Tesla to getting a hard hit. Square, hard hit down. Shopify, Zoom, Roblox, Spot, Coin. Look at all these names. Unity straight down there, looking really weak there. Unity's down 8.8%. Twilio down about almost 4%. Roku 5.6%. So many losers that are in ARKK right now, and big losers. We're not talking small ones. These biotechs down 8%, 6%. So plenty of stocks seeing that reversal in the ARKK. One that I always watch when I see that reversal is SARK. Look at SARK starting to take off. I'm going to have to bring Tuttle back on here. Matthew Tuttle, I talked to him when we just opened up SARK. So I'm looking to probably just bring him back. I did trade this week, something that I'm going to keep on watch. Will we get a next breakout here in SARK? Trying to come back towards those highs, maybe to 65 and 70 at some time next week. It's definitely a stock on my radar. All right, let's keep going. Let's take a look at some other stocks that have moved today on the downside. Consumer cyclical getting dragged in some leisure. We saw leisure moving on up earlier in the week, now getting hit hard. Some of the reopening trades right back down. RCL, the hotels, Six Flags down 6%. Man, Six Flags just doesn't want to turn around. This does look ugly here for Six Flags the last couple of weeks. We'll see if we continue to see some downside action there. Hilton turning around, Marriott. Just these stocks were trying to get the bounce, and they could not get it there. All right, we're going to take a quick second here to bring you guys a Benzinga Pro trailer here, and then we're going to continue going. And around 1:45, we'll be able to get Stephanie Link on. I know that you guys are excited about that, but stay tuned, guys. What I'm going to do for you guys is after this trailer, if you guys have a ticker you guys want to check on out, throw it up in the chat, and I'll make sure to check it out now before we get to Stephanie Link. And then, of course, once we get to Stephanie, if you guys have a question, throw it up in the chat. Let's keep it going here with Benzinga Pro.
When you want to maximize your performance in the market, you need access to the highest quality tools and news available. Benzinga Pro stands out from all of the options you'll be presented with, and their instant access to market-moving news positions you to be prepared to take on the market in the best ways possible. Here's how it works. Benzinga Pro's news desk creates original news content that's available on your main news feed and gives you actionable information about companies you may want to invest in. This news desk information gives you the chance to beat the market, receive impactful news as it breaks, and jump on trending stocks before and as they rise. And beyond that, Benzinga Pro is packed with helpful features and unique insights that give you the best information possible. There's tools like the Live Audio Squawk, which streams every day with important news and timely updates, and the real-time news alerts that allow you to stay on top of every developing story you're keeping tabs on. Alerts and news will be sent straight to your inbox or delivered as live sound alerts. For those investors that want real-time, actionable, and breaking news about companies they may be looking to invest in, Benzinga Pro is the tool to use.
All right, traders, I'm back here. Let's go ahead. Let's keep running through some tickers. If you guys got one, throw it up there. I'll make sure to go through them. All right, let's start running through these. First one up, Kalu wants to take a look. I'll take one of them, Kalu. GSAT or Mullen? You determine. I'll let you put the next one up, and then you tell me which one you want to take a look at. CE, I'll take a look at that one first. This is from Lau. I'll take a look here. Now we're pulling on back here. Chemical stock. Now one thing I will state is take a look at the daily. You can see kind of how you really haven't gotten out of this kind of bearish trend. I would really want to see a close up here, and you could see how you started getting up there, but what did you get? Kind of had some wicks up there, not really closing back there towards the 120s. I think that's the move towards the upside. Downside will break if you start coming through this trend line. You can see we had that one down gap day where it really just reversed back to the upside. I would look for it to come back down and try to take out these lows. If I was a bear, that would be the 110.60s and the 110.90s. So looking at that 110 area to really start coming into play. Right now, this looks like it's still in a bearish trend. I know that some of these chemical stocks were starting to reverse. This is one that I think is still on a bearish kind of pattern here. All right, let's keep going. I did get Ape. All right, Ape. All right, Ape not doing much, just sideways. I've talked about 750 for this one. It tried to do it earlier in the week. Take a look at the hourly chart on Ape. You can see how you have kind of this downtrend. You see right over here, I was still watching it for that 750 move, but it didn't really want to give it. So for what I would say is just keep an eye out on that. If you can get a run to 750, maybe you can get this to start lifting. One thing at least is that it's not just completely falling off the tape today. That's a good sign. All right, let's go to GSAT. GSAT wants to take a look at it here. Kalu, all right, I got you. Let's take a look here. So this is one that I've actually traded in the past here. It did rock out of this kind of 140 area. It's trying to get back up there to $2. Let's take a look at the weekly, see if we see any resistance that we're coming into. And so for me, I would just kind of draw this resistance around here around the 192s. $2 is really where you need to get it back above. And you can see on that recent spike, it tried to get to $2. And what happens? It fails right there. That's going to be the level to watch on the upside. If it could get and close above $2, I think this is feeling good, like it wants to keep going towards the 225, 250 highs. But if not, be careful because it could turn around really quickly right back down to 176. At least this one kind of holding up there above $1 and not showing you on the chart that it goes back down to, like, let's say 50 cents and then comes back to $1.92. It's been holding on for a little while. All right, let's keep going. Amazon being brought up in the chat. I'll take a look at that. Amazon is one that I'm looking for it to fill the gap here on the downside. That's why I have this drawn here. It did gap up with the earnings on July 29th, and now I'm looking for it to come back down and fill down here towards a high of 122.84. So look for it to come into that kind of level. That's what I would be watching on Amazon. Declining chart, and it looks like it's falling fast. All right, let's keep going. All right, definitely not the day to buy the dip. Definitely not that. Let's take a look there. Celsius. That's a CELH. All right, let's go to Celsius Holdings. I did see that mentioned in the chat. There it is. Got you. I can't. I'll only do one, Jessica, but I got you on Celsius. I think this has been in a nice up run. Now you're seeing it pull back here towards kind of the high that it was prior. That's okay. Now we want to see that level that it broke out of becomes support for it, right? And so you're seeing it pull on back here, the 90 MA right below it too. I like that look out there. That's a 108.50 area as support. That's what you're looking for it to kind of hold there. You're seeing it bounce today around the 109s, and you can actually just pull this down here towards that 108.40 area. And you really don't want to see it close down to 108. You want it to bounce there, get back up there towards the 120s, and stay in the trend that it is. Another thing that you can do is, of course, just follow the trend. The trend's your friend, they say. And definitely don't trade against the trend. And you can see it here. It's been trending on its way up. If I was a bear, I'd be waiting for the crack back down below 100 to really start cracking on Celsius Holdings. All right, we'll see what happens with that energy drink. I'll take maybe, let's actually just get out of the kind of the free talk here. Walmart, I can't tell you what to do with that chart. That chart is just going all over the place. It's hard for me to get a read on Walmart. Back here where I had this kind of little yellow line here back in July 11th, I was bullish. I was looking for it to make the move on up. It got up there. It started coming on up, and then boom, we got hit with the kind of the warning that was out there. Walmart's came right back up there, and then, of course, spiked up there close towards the 200-day moving average. I would just look at that. If it can recover the 200-day moving average, maybe you see an upside. But for right now, as you can see, it's coming right back down here. And it's a hard chart with a whole bunch of these gaps just going up, down, up, down, up, down. And we need to keep watching what comes out of the discount stores. One thing that I've talked about is just maybe keep your eyes on Target. If Target can really kind of fill this gap, maybe I would be watching a little bit of Walmart. But as you can see, Target's just been sideways here for now. And I mean, this has been a pretty long period. Now it's been about 3 months, over 3 months, that Target has pretty much gone nowhere. All right, let's get out of Walmart and Target. It's time. I know the chat has been excited to get into it. Let's go ahead. Let's get into our special guest today. Super excited to go ahead and get to Stephanie Link, Chief Investment Strategist at Portfolio Managers of Hightower Advisors. Let's get right to it. All right. Welcome back on, Stephanie. It's good to have you finally on my show.
Thanks so much for inviting me.
Yeah, of course. It's great to have you on. I know that you were like everybody waiting to see what happened this week. So let's first start off with some of the quotes that caught you by surprise and also caught me by surprise. Fed Chair Jerome Powell used a specific quote that will be pain to households and businesses as they fight inflation. What do you think he means by this looking forward?
Yeah, I mean, I don't think that the speech itself was that surprising, the content, right? I mean, we knew that they were going to be somewhat cautious. All the Fed governors were speaking very cautiously, and they have been for the last couple of weeks. But to have the chair actually say that there's going to be pain for some households and businesses, I thought was really striking. I thought he sounded much more hawkish today. And I think that that's one of the reasons why the market has sold off. In addition to, we just rallied 16% from the June lows. And so the setup really wasn't so good. But in the end, they're fighting inflation. And ironically, they're the ones that were slow to react last year. They should have been doing more last year at this time versus waiting. So there's inflation everywhere. We know it's not just commodities. It is wages, it's rents, which are very sticky parts of inflation, food prices. I know we're supposed to exclude food, but I eat. I don't know about you, but I eat every day. So food is up 13% year over year. Natural gas prices are at 14-year highs. Oil has stopped going down. And then we got a core PCE number this morning that was still pretty hot at 4.5%. Their goal is 2%. So they were focused, and Powell was focused in his speech on the object is to get inflation down. Their objective is price stability, and their goal is to get to 2% inflation. And whatever they have to do to get there, that's the problem, right? And so they're going to slow things down. So not a lot of surprise, but it's just that the setup was so bad. And I think on the margin, he did sound a little more hawkish.
Yeah, one thing that I was hearing from different analysts around, and everyone was starting to take turns would it be the June lows really? And are those lows going to hold? I think now that the comments have come out, how do you feel about those? Are you still in the camp that the June lows can hold here?
I think we're in, this is kind of, I'm going to kind of like bail on your question, which I
Yeah.
never do, but I will say, I think we're just going to be choppy. I think we are in a
Okay.
range. I think we're 3,600 to 4,200 for the time being until we can kind of get our footing and until we can actually get some of the data. So I know we got, as I mentioned, core PCE today was hot, still hot rather, but that's backward looking. So let's look at the data, the CPI, PPI, another core PCE number that comes out, employment cost index numbers that come out in September before the next Fed meeting. And maybe we could get comfort on those numbers continuing to improve. But you know, a lot of Powell himself actually said, and other Fed governors have said, they want to see a several months of a sequential improvement to inflation. And I just don't think you're going to see massive moves. I think you'll see moves. I definitely think you'll see lower moves and lower numbers. But I just think that the overall year-over-year numbers are still going to be very daunting. And so is it 3.5%, 4% Fed funds? But that's what it seems like they're going to get to, and then we'll be data dependent.
Yeah, it feels like everyone wanted to go really quickly that the Fed would flip there. And of course, I have to comment that you were right on Jerome Powell sounding hawkish at the symposium.
Yeah.
And one thing that you stated was that inflation's still everywhere, right? I mean, just look around you, right? And are you concerned that inflation could eventually, everyone thinks that it peaked. Do you think that we could get back on up and actually kind of push that back to higher numbers?
It's a very good question. And I actually do, because if you look at nat gas prices and you look at oil, and let's just talk about oil for half of a second.
Yeah.
Now, I know we're supposed to exclude that too. We're supposed to exclude all kinds of things that we actually use every day. But on oil, it stopped going down, number one. Number two, the SPR comes at the strategy of using the SPR to basically flood the system is going to end in October. And OPEC Plus is now considering production cuts. Now they're saying and citing demand weakness, and we'll have to see how demand holds up. But all of these things are reasons why oil prices, I think, can go higher from here. And the biggest one really is that if you look at the industry, the energy industry, the complex as a whole, they have changed their strategy over the last several years. Instead of drill, baby, drill and overproducing and boom and bust, like we've seen many, many, many times, they've actually decided, no, you know what? We're going to take that free cash flow and not plow it into overproducing. They're actually going to use it for shareholder value creation. So buybacks, dividends, special dividends. I've lost count how many companies have announced special dividends this year alone. It's been so many. These companies are flush with cash. And what they're doing is they're saying, we want to give it to you, shareholders. We don't want to create more supply. And so that's why all of these things kind of are reasons why I think the oil prices will stay elevated. And oh, by the way, even oil at today's price, let's just call it $90 a barrel. Companies, their break evens are $40 to $50 a barrel. So what that means is they're making money hand over fist at 80, at 70, at 60, and of course, north of 100, right? So we'll see what happens, but I do think that we will see a higher inflation going forward, and that's problematic for the Fed.
Yeah, definitely. And just to kind of quote one thing you just mentioned is that sticky rent, right? I think that's why we didn't really truly see the downfall in inflation was that sticky rent. And if energy comes back roaring, well, we'll see what happens there in the inflation numbers. It's good that at least we get a CPI number before the next meeting. So that's something that we'll be watching. Now let's get out of a little bit of the macro talk. I want to talk a little bit more about retail. We've been seeing a little bit of a mixed bag. How do you see retail right now, and where are some opportunities out there?
Sure. Well, I think that the consumer is still in pretty good shape. We had retail sales that grew 10.3% year over year, 12.3% excluding autos. Savings rates are still high. And we know from all of the retailers that have reported, for the most part, it's not a demand problem. It's not a traffic problem. It's a trade down problem. right? And it's so they're the consumer shifting away from kind of the wants towards the needs, more consumables, but they're still shopping and they're still buying, and that's a positive. However, that being said, we got personal income today. That was not a good number, and I do think inflation certainly is going to eventually hit the consumer. So I think you want to be very selective. And so I would say I've been kind of suffering with Target. Stock is down 25% year to date, but they have a value proposition. They are definitely a market share leader. They are seeing the traffic. They just messed up and had the wrong inventory. They had all the goods stuff when people wanted the services stuff, right? So they've said many times that people wanted luggage and suntan lotion instead of TVs and electronics, which totally makes sense. And so I do think the services side of the consumption equation is an area where you want to have some exposure, but I still think that some of these goods producing companies on the retail side offer attractive valuations. I also think that some of the casinos, like Wynn Resorts, has gotten hammered, and if China continues to stimulate and they reopen, that stock ought to do better. I like Starbucks a lot because Howard Schultz is back in leadership mode, temporarily, of course, but I think that story is certainly an interesting one, and it's trading at the low end of its historical valuation. And it's still like Nike. That too is a China reopen kind of a story. So I think within retail, you want to be very selective, and I have found special situation stories that are more attractive to me.
Awesome there. I think you even knocked out my next question. I was going to give you a little chance to talk about some of the ones that you like, and you went right through them. So I appreciate you coming on. Like always, Stephanie Link, coming prepared. Like always, Chief Investment Strategist, Portfolio Manager at Hightower Advisors. Thank you for coming on today on my show.
Thanks for having me. Have a wonderful weekend.
Definitely. We'll have you back on, Stephanie. All right, that's going to do it for us today on Stock Market Movers. I will take for a second. I know that you guys had some more stocks that you guys wanted to talk. I did want to get Stephanie on out of here. She's definitely busy, but it was a great conversation there. We talked about the inflation and the worries that you guys should also be watching. I think that's really my concern, is that when I saw the energy peak, and I did see oil come on down, but let's just take an overall look, right? I mean, when we saw oil start coming down, I was wondering, would we get kind of the peak to come back for those numbers? And if we start seeing ExxonMobil get back up there towards the 52-week high, if we come back through that 105, if we see Oxy through the highs there that we're already getting through, if we see Chevron, getting on through there, what's going to happen to inflation when we get back up there? And will we start getting through some kind of the peak numbers where inflation could actually go higher than we've seen? I think this is exactly what Fed Chair Jerome Powell doesn't want to see. And that's why you're seeing more and more Fed take shots and saying that they're not trying to see kind of us change tune. And if anything, they want to see a more restrictive policy than worrying about these growth stocks or the overall stock market. And so this is something that we all as investors just need to stay attuned with. All right, that's going to do it for me. We'll take a look. Let's see if there's any other stock that you guys wanted to roll through here. I'm seeing some other ones. I've seen MO out there, DND. Let's see what other ones you guys are mentioning. Not too much there that you guys, if you guys want to throw in some other ones, feel free. Go ahead. I have a couple of seconds here. But one that I'm going to be watching in the next couple of weeks, and it's interesting to kind of watch, is we look in the basic materials, we were starting to get a little bit of a bounce in certain areas like steel and copper and agricultural inputs really getting strong, coal coming on back. Look where coal is relative to where it was in June. This is also some area that we could see the inflation come back, right? If coal prices are going to keep going up, electricity prices going up, energy prices going up. So we have to be careful on stocks like this. And yes, ConocoPhillips is one that I really like there. I was talking for the push above 100. It could easily be back up there in those Junes kind of moments. And if you think about it, that was really close to where we topped out or we bottomed out on the market, was when energy started turning back around. So we have to see what's going to happen in these names. It's going to be interesting to watch. Banks being mentioned here. Let's take a look at like a Bank of America. So Bank of America turning back around. These were some that caught me by surprise when they started coming on up. This to me seemed like more and more outlooks that investors were like, well, we're not going into recession. We can start looking at these banks for opportunities. Interest rates can maybe go up a little bit more, but they don't see recessions, so we shouldn't worry too much about the banks. Well, you're seeing them turn down hard today. And I think that was more comments of probably the hawkish tune that you saw there, and that we're going to be probably looking at more of a restrictive policy for a longer period of time than a quick flip in the Fed. We'll see what happens. Like always, I'm going to go ahead and get on out of here. Will natural gas stay higher for all of winter, or won't rent stay high for 6 months to a year at least? I would actually think that's a really good question that you finished off with, Robert. So I'll finish off with that question also. I think, natural gas will get higher. I still remember last year when natural gas started rising in price. I think we need to watch on one major factor. It's all about Nord Stream 1. Will they come back online after the shutdown on the 31st? Keep that on your eyes, because you will be hearing more and more talk of natural gas as we go into fall and winter, and as those furnaces need to get turned on. All right, that's going to do it for us. I hope you guys enjoyed today's show. We went through a lot. We talked about Jerome Powell and what he talked about at the Jackson Hole Symposium. We talked about personal consumption expenditures. We talked about the better than expected University of Michigan Consumer Sentiment Index. We talked about the concerns of natural gas going into fall and winter. Also, we got into Ford Motors hiking up the price on the Mustang Mach-E. Merck, will it make the deal with Seagen? Marvel earnings. We talked Ulta earnings, Affirm, Workday, Gap. And like always, we had our special guest on today, Stephanie Link. Want to definitely give a thanks to Stephanie for coming on, Chief Investment Strategist and Portfolio Manager at Hightower Advisors. Please let me know, what do you guys think about stock market movers? Do you guys like the approach that I take on the show? Trying to get you everything in, and of course, expert opinions every single day. Hit the comments after the show. I'll see you next time. And like always, guys, hit the thumbs on up. A little bit later today, we will be having At the Close. So if you want to go ahead and wrap up the trading week, come on over to At the Close. That's going to be at 3:30. And I'll be happy to have Joel Elconin back next week. But like always, I'll be there at the Close. Hit the like before you get on out of here. I'll see you next time, team.